Sorry we're a little bit late. I just had a couple of technical issues, but we're here now. We're on, and we're here to talk all about self-assessment.
Indeed.
I'm Adrian. Hello. I work in the comms team here at FreeAgent, and I am joined once again by our wonderful chief accountant, Emily Coltman.
Hello.
As I said, we're from FreeAgent, which is online accounting for small businesses and for freelancers. And as it's the end of the summer and we're getting into kind of the start of the crunch time, really, for the year for a lot of sole traders, limited companies, and freelancers, we thought we'd take a closer look at self-assessment. It's obviously coming with the deadline at the end of January, and this is kind of the I think the key time of year to start thinking about it and get set up. So, without further ado, we are going to be taking all of your questions about this today. If you click on the Q&A function, which I'm just setting up now, you can ask us a question directly, straight away, and we'll do our best to answer it straight off. Yeah. We're also going to be, I'm also going to be posing a few sort of general questions through to Em as well, just to get a flavour of what is self-assessment and how the whole sort of setup in the system works, in case anyone's coming that is going through self-assessment for the first time and doesn't really know that much about it. So yeah, might as well get cracking, and as I say, just post questions through into the Q&A app, and yeah, hopefully it'll be a good session. I think the first thing to do, Em, is probably just look at self-assessment as a whole. So imagine that someone is coming to it for the first time. This is going to be their first year of self-assessment. Can you just talk a little bit about what exactly self-assessment is and who has to do it?
Yeah. Okay. If you're new to running your own business, then you have to tell HMRC about your income and your expenses and various other things. The reason why it's called self-assessment is because the taxpayer, that's you, is expected to work out how much tax you're going to pay to HMRC. It used to be that HMRC worked out the tax for you, and that was way back in the day before I even qualified as an accountant. But now the taxpayer is expected to work it out for themselves. But do not despair, that doesn't mean you have to get your calculator out. HMRC provides software to help you do it, as indeed do FreeAgent, as indeed do lots of other providers. FreeAgent, you can do your tax return if you are a sole trader or if you're the director of a limited company in a lot of cases, and file it. So what's a tax return? Short for self-assessment tax return. It just means that every year, if you run your own business, HMRC want to see a summary of your income. If you're a sole trader, on your tax return you will put your business's income less its expenses. If you are the director of a limited company, on your tax return you will put your salary and your dividends taken from the company. Sometimes also benefits that the company provides to you, like a company car. Sometimes also expenses you get paid back if you've spent your own money on company money and they pay you back. Sometimes that has to go on your tax return as well. So what a tax return in brief is, it's a summary of your own individual income less certain expenses for the tax year. And it's got to be filed. Do you want me to talk about that now?
Yes, definitely.
Yeah. The tax return always covers the tax year, which runs from the 6th of April one year to the 5th of April the next year. There is a reason why it is that silly date. I'll explain that in a minute. But the tax return has to be filed by the end of the following January. So for the tax year 2013-14, that's the tax year that ran from the 6th of April 2013 to the 5th of April 2014. Those tax returns have got to be in by the 31st of January 2015. If you don't file them on time, HMRC will fine you £100 straight away, even if you don't have any tax to pay, even if you've paid all your tax, even if you file your return on the 1st of February. You're still late, you've still got to pay £100. And the longer you leave your return, the fines start racking up. If you don't want to file your tax return online, if you want to do it on paper, you've got even less time. Then it's got to be in by the end of October. So in other words, if you don't want to file your tax return online, get your skates on. Mm-hmm. So I promised to explain why the tax year uses that funny date.
Yes, yes.
Yes. No. The reason for that is because the year here in the UK, in Britain, used to start on the 25th of March, Lady Day, the date of the Annunciation of the birth of Jesus. In 17 something or other, I always forget exactly which year, the powers that be decided that they were going to use the same calendar as the rest of Europe, the Gregorian calendar, so that they were going to start the new year on the 1st of January, but also they had to cut out 11 days. We were 11 days behind the rest of Europe. They had to cut 11 days out. The tax year was never officially changed, so that is why the tax year starts on the 6th of April, 25th of March plus 11 days.
Excellent. We history lesson for everyone.
Yes,
excellent.
indeed.
We're talking a bit about, obviously, you know, if you're if you're filing for self-assessment, you have to register your business with HMRC.
You do.
What's the process for that? How do you go about it? Do you just go through to their website and register, or is there something more you have to do?
No, if you're a sole trader and you just want to let HMRC know you've started your business, what you do is you go to the revenue website, which is www.hmrc.gov.uk. At the top left-hand side of that page, you'll see a link that says register. There's a menu, the top item is login. Underneath that you see register, that's where you go. So you click on that link and you tell HMRC that you have set up your business. They'll ask you to say when you started trading, they'll ask you to give things like your address. So if you are a sole trader, that's where you register with HMRC. If your business is a partnership, then you'd follow the same process to register the partnership with HMRC. There is another link that I believe we've published in some of our content that explains where the other partners would have to register, because if you're registering as a partnership, the partnership must be registered with HMRC and so must each of the partners. If your business is a limited company, then you would have registered the company with Companies House, and Companies House now automatically tell HMRC that the company is registered for corporation tax, but they don't tell HMRC that you, the director, need to register for self-assessment as well. So that again is something else you need to do. So you'd need to go to the register link on the HMRC website and follow the instructions to register as a company director.
Okay. As I said, if we mention any sort of links and stuff, we'll put them up onto the Google Plus page afterwards, just in the comments as well. So so if there's anything that you're not too sure about, or you've heard us mention that you want as well, then we'll put them there. And if you can't see what you want, then drop us a line, and we'll dig something else out for you. I was going to say. If we've talked obviously about, you know, the kind of figures that you need to put in your tax return, what it is about it. I suppose one of the big questions I know that we had last year that people were asking us was what are the main things that I need to look out for? What are the main sort of pitfalls that I could trip up with here, and that's going to get me into trouble with the tax man? Yeah.
Good question. Well, in terms of income and expenses, certainly, if you're a sole trader, watch out that you include the income and expenses for the right period on your tax return. It is far, far easier to prepare your accounts to match the tax year each year than to try and prepare them to a different date. Particularly if you're in the early stages of your business, you can get taxed twice on the same profits unless you use the tax year end as the date that you prepare your accounts to. As a sole trader, there's now two ways you can prepare your accounts. Usually you would need to use what we call the invoice basis. So that means that you would include any income that you have issued invoices for, any income for which you have done the work but not yet invoiced, that falls within the tax year. Anything that you've been invoiced for and not paid, you would still have to include, so watch out for that. Another point about when to count your income, if you get a bad debt, then strictly speaking that needs to be included in income and in costs. So the effect on the profit is nothing, but you still need to put it in as part of your income and take it off your costs. Now, since this tax year, 2013-14, the tax year that we're looking at, if you're a sole trader and your turnover, that's your sales for the year, is under the VAT threshold, which is £81,000 at the moment, you are allowed to report your income on what we call a cash basis. So that means you report just what you received from your customers. If you've invoiced but not been paid, say by the 5th of April, then if you're using the cash basis, you leave that out. Basically, that is just a timing difference. You are going to have to pay tax on that income sooner or later, but that's what we call the cash basis. Then thinking about costs, Again, depending on whether you're using the invoice basis or the cash basis, make sure that you record costs at the right time. If you're using the invoice basis, it's when you incur the cost. If you are using the cash basis, it's when you pay for it. There are special rules around things like if you buy a new piece of equipment, that again is treated differently if you are using the invoice basis or the cash basis. On the invoice basis, if you buy a new piece of equipment, you get what we call capital allowances, which is a way of reducing your profit to compensate for the fact that you've spent that money on equipment. On the cash basis, they come off your profit just like any other running cost. That again is something to watch out for, capital equipment. And another common query is, what happens if you are working at home? Well, as a sole trader, there are two different ways you can approach it. One, if you are entitled to use the cash basis, doesn't matter if you're actually using the cash basis, if you are entitled to use it, then you can use a flat rate allowance to work out some of the costs of working at home. But the flat rate allowance, which varies by how much time you spend working at your home, will only cover certain costs. It only covers gas, electricity, broadband and internet. Doesn't cover things like your council tax, your rent, your mortgage interest. So watch out for that, don't miss those out. You can include the flat rate allowance and other home working expenses. If you are not entitled to use the cash basis, so that would be if your turnover is over £81,000 a year as a sole trader, if you are not entitled to use the cash basis, you must work out all the costs on the basis of what I call the business proportion. We've got an infographic about that, haven't we, Adrian?
We do.
Which we can share.
Yes, we certainly will. I think we can potentially sort of look a little bit kind of more in depth at that as well. Maybe just talk a little bit more about how you work out sort of the business use of each particular room that you're having, and and how to sort of stay on the right side of HMRC.
Good point, Adrian. Because business use of home is something that does cause a lot of questions, because a lot of small businesses are run from home. So if you want to work out what I call the business proportion of your home running costs, HMRC say that you can use any, quote, fair and reasonable method, unquote. So you could use floor space, you could use number of rooms. My own favourite method works like this. You count up the number of rooms in your home. There's no guidance from HMRC as to which rooms you should include, whether you should include, for example, the kitchen or the bathroom or the hallway. My own approach is to say, if you heat the room, include it. So leave out an unheated hallway, but include the kitchen and the bathroom. Some accountants, though, do say don't include the kitchen or the bathroom, so check with your accountant to make sure. So you add up the number of rooms in your home, that's the first start. Second point is to work out how many rooms in your home you use for business and how much. So you might, for example, I have one room in my home which I use for business. That's my office, but I don't use it entirely for business. It is also my music room, and it has my piano up the corner. Why is that important? Why should you use a room partly for business and partly for something else, not exclusively for business? It's because if you own your home or you're buying your home, when you sell your home, then HMRC could say that that particular room is a business asset and clobber you for capital gains tax. So if you own or are buying your home, then don't use a room exclusively for business. If you're renting your home, doesn't matter, because you don't pay capital gains tax on rented properties or properties that you are renting to live in. But if you are buying your home, as I say, do not have a room that you use exclusively for business. Make sure that you can demonstrate to a visiting tax inspector that you don't use it exclusively for business. So if a tax inspector ever challenged me, I would be able to say, look, there's a really great piano. How many accountants do you know who play the piano in the course of their work? So have a demonstrable use of the room as something else, like a guest bed or some storage for family books or toys or something like that. Make it your children's playroom as well. Obviously, if you do that, for goodness sake, put your computer away when you finish working in there. Adrian will bear me out on that. He's got a 1-year-old son, and if you left your computer where Finn could reach it,
he'd destroy it.
Exactly. So work out how much you use your rooms for business. So for me, that would be one room in, let's say, a 10-roomed house. that gets used 80% for business. And do take your best guess as to how long you spend working in your room. It's X% of how much you use that room. It's not X% of 24 hours. It's X% of the use of the room. So, for example, I might say I'm in my office for 5 hours a day, of which 4 relate to work and 1 relate to playing the piano. So I would say that's 80% of my time in that room is spent working. So then you apply the fraction of the number of rooms times by the percentage that you use that room to your running costs. So that would be things like gas, electricity, rent if you rent your home, mortgage interest if you're buying your home, note mortgage interest, not the whole capital element. Also insurance, if your house insurance also covers your business. If you've got a separate business insurance policy, you claim 100% of that. Also repairs or cleaning if they're for the whole property. So for example, a repair to the roof, you claim the business proportion of that. If the repair or cleaning is just for the room that you use for business, you take that times by the percentage of business use, so that would be 80% for my office. But if the repair or cleaning relates not to your business room at all, you can't claim any of it. Do be very, very clear, these are the rules for sole traders. If you're the director of a limited company, then the rules are different and they're tighter. So we've got an infographic about that.
We do.
Company directors, you are not allowed to claim fixed costs that you would pay anyway. Things like your rent, your insurance, your council tax. All you can claim is a percentage of your of variable costs, so costs that would increase because you're working at home. So that would be your gas, your electricity, and so forth. Because if you weren't working at home, you wouldn't have to pay so much for your gas and electricity. So watch out for that.
Okay, and as I say, we'll post links to both of those. As I say, we've got an infographic for sole traders, which takes you through it, and then another one for limited companies as well. So we'll post those. Looking at sort of other kind of expenses,
yes.
What are the? You can give us a flavour of just a few of the other main kind of the main expenses that you should be thinking out for your self-assessment.
Yeah. Don't forget business use of home. Don't forget also travel on business in your own vehicle. That one's quite key because a lot of sole traders will travel on business. You'll go and visit clients, you'll go and pick up your business cards, you'll go and visit your accountant, whatever it may be. And you may well travel on business in your own car. Now, if you are entitled to use the cash basis, remember that's if your sales are under £81,000 a year, and so long as you have not claimed capital allowances already on the card that you're using for your business, you can use what I call the mileage method. What you do for that is you add up all the miles you travel on business, and you multiply that figure by the figure set by HMRC, for the figure set by HMRC, that's 45 pence a mile. They put it up a few years ago. 45 pence a mile for the first 10,000 miles you travel in a tax year. I've got my brain on back to front. And then 25 pence a mile thereafter. So if you travel 11,000 miles in the tax year, you say 10,000 times 45, 1,000 times 25. The good news is FreeAgent will work that out for you, including tipping you onto 25p at the right moment. So that's what I call the mileage method, and that is quite handy because it means you only have to add up the business miles that you travel, not business and personal. But do watch out for what actually constitutes a business journey, because HMRC are quite strict about that. If, for example, as a sole trader, you travel to visit the same client regularly for more than about 6 months, and you spend a fair bit of time there, you're likely to get clobbered by HMRC, who are likely to say, well, I think that's a home to work journey, you're not having it. So do discuss that with your accountant, watch out for that. The second way you can work out your travel expenses in business in your on business in your own car is what I call the actual cost method. You have to use this if you're not entitled to use the cash basis. And the way that works is you work out how much you use the car for business, which is going to be a case of adding up all your mileage, then adding up the business mileage only and taking the business mileage as a percentage of the total. That's your business use of the vehicle. You can claim capital allowances on the cost of the vehicle, on the business use proportion. And you can claim the business proportion of the actual running costs of the car. So that's your motor, that's your petrol, that's your repairs, that's your insurance, your MOT, basically all the expenses that you incur to run a car, you include a business proportion of those expenses. So those are the two ways to do business travel in your own car.
Okay. Can you give us a brief flavour about a couple of other expenses that I want to look at? So obviously, we have clothing.
Yep.
So business clothing, and also entertaining as well.
Business clothing, business entertaining. Okay, I'll do entertaining first because it's quicker. The thing with entertaining is that HMRC are very, very strict about when you can and can't claim food and drink, because they say we must all eat to live. They also do not recognise that entertaining customers, suppliers, basically anybody who's not a bona fide employee of your business, they will not let you have tax relief on that. So if, for example, you take your accountant out for lunch to thank him, then you cannot claim tax relief on the cost of that. Even though if you weren't in business, you wouldn't know your accountant, you wouldn't bother taking them out for lunch, HMRC say, can't have it. So that must go in business entertaining in FreeAgent, and you cannot claim tax relief on it, which means in this context, you cannot use it to reduce the amount of profit you pay tax on.
Would that count the same for, say, for example, a business lunch that you're doing with a new client as well?
Yep. New client's not your employee, can't claim tax relief on it.
Harsh.
Yeah,
harsh.
Very harsh. I actually had a client on one occasion. He was the director of a limited company. His wife was not an officer of the company. She wasn't director, wasn't company secretary. She helped him unpaid. She used to deal with his post, with his phone calls, and what have you. She was basically an employee in all but pay. She wasn't paid. And he used to take her out for lunch to thank her for her work. HMRC said, no, you can't have tax relief on that. They said, because you're taking her out for lunch because she's your wife, not because she's an employee. They said, if she's not on the payroll and being paid as a bona fide employee, can't have it. So they really are very strict about that.
So be very, very careful.
Yes, be very careful.
Yeah, and again, speak to your accountant as well. If you're unsure about any of this stuff, then
yes,
always better to get the professional opinion rather than you make a mistake.
Yeah, absolutely. Business clothing, you also asked
about, right,
Adrian.
Yes.
Yep. So if you're a sole trader, there are only 3 circumstances where you can claim tax relief on clothing. Again, HMRC say that we must all wear clothes to be warm and decently clad. It's not, clothing will always have what they call an intrinsic dual purpose. It will never be just for business. It always fulfills a personal requirement as well, to be warm and decently clad. So, for example, Adrian and I are both wearing our FreeAgent hoodies, and those are not just promoting the FreeAgent brand, they're keeping us warm and decently clad, although the decent bit might be something of them.
I know, I think I'm looking all right today.
Very suave. So they are serving 2 purposes, our hoodies. So you have to be quite careful when you can claim tax relief on clothing. If it's a uniform that marks you out as doing a particular job, you can get tax relief on it. So that would be if you were, say, a nurse or a policeman or a fireman, then the cost of your clothing is all right. You can claim tax relief on it. If it's protective clothing, so for example, if you're a builder and you go out on site, then you would be able to claim the cost of tax relief for example, your safety boots or your safety helmet, or if you've got a special protective jacket, a high-vis jacket perhaps, you can claim tax relief on that. What you can't claim tax relief on is the other clothing you're wearing. So things like your shirt and your jeans and your socks, you can't claim tax relief on those because you'd be wearing them anyway and they're keeping you warm and decently clad. You can't go onto a building site without trousers on, for example. So they are keeping you warm and decently clad, they're not protective clothing. And the third option is if you are an actor, you're an entertainer or something like that, and it's your costume. So for example, if you are a magician and you dress and you wear a suit and a cape and what have you, that's your costume. If you are a clown, if you are a children's entertainer, you wouldn't go to Tesco in your clown outfit. So that is accepted by HMRC as for business only. And so you can claim tax relief on it, but they are quite strict about that.
So yeah, so if you're trying to claim that you're not going to wear your monogrammed company T-shirts through to a pub or something, they're not going to accept that as an excuse.
That's a very good question, actually, because if you are the director of a limited company, you count as an employee, and the company can actually provide branded wear to its employees. So FreeAgent can, for example, claim tax relief on the cost of providing hoodies for me and Adrian. But HMRC do not say anything comparable to that for sole traders. So if you're a sole trader and you have a branded garment that you wear for things like trade shows, you could try claiming tax relief on that as being advertising. Just a suggestion. It's worth a try.
Yeah. Again,
ask your
speak
accountant.
to your accountant.
Yes.
they'll set you right with it.
Yeah.
I think to sort of finish up, I think we're going to go for another sort of 5 to 6 minutes because we're a bit late. So there's a couple of things I want to ask.
Yes.
The first one being, how do you file? I think we've actually not covered this so far. We said who has to file and what the nuts and bolts. We've not actually said how you do it. So can you run through that a little bit now?
Certainly, yes. Well, there are 2 different ways you can file your tax return. You can either fill in a paper form and send it to HMRC, or, which is much easier, particularly because you don't actually have to get your calculator out and work out the tax, you can file it online. If you're going to file online, you get a bit longer. You get till the end of January, not the end of October, and the calculations are done for you. You can use FreeAgent, and obviously we would very much like you to use FreeAgent to file your tax return online. If you are a sole trader, you can file your tax return online through FreeAgent, and so long as the only other income you might have is income from a job. If you've got income from, say, property or a capital gain or a trust, then I'm afraid you can't use FreeAgent. If you're the director of a limited company, you can also use FreeAgent so long as your only other income is income from that job and any other employments you may have. Again, income from property, trusts, capital gains, I'm afraid we don't support them. What you would do, what you would do is FreeAgent will fill in most of the figures for you, and then you just literally hit the button to file online with HMRC, and you put in the registration details that you would have got from HMRC when you registered with them, and off goes your tax return online securely to HMRC. If we have got instructions in the knowledge base to help you do that.
Again, we'll post links to those as well.
If for whatever reason you can't use FreeAgent, then there are other tools out there. HMRC have got basic software. You can literally log into the HMRC website and prepare and file your tax return. There are other packages. TaxCalc is a favourite of mine. Simple Tax is another possibility. There are other packages out there that let you file your tax return if FreeAgent can't help you. But because FreeAgent pulls the data automatically from your accounts, it's a good idea to give it a try. It
just makes things a lot easier. And also, we released the sole trader self-assessment filing last year, just after Christmas and New Year, and the feedback we got was fantastic. So that's keeping on going. And as Em said, we've literally just given it for limited companies as well. So we'll post the blogs and the knowledge base articles and everything else that'll tell you how to do it. But if you can file, if you're eligible to file through FreeAgent, then do give it a go, because we've been told that it makes the whole thing a lot easier by users who've been really happy with it. So that's great. I'll get to my last question very soon, but we do have one here from Catherine who says, in the tax year 6th of April 2013 to 5th of April 2014, which is my first year as a company director of a limited company that started on August 23rd, 2013, prior to my start date, I was on JSA. I've been getting working tax credit while operating. So I think she's trying to ask what she needs to think about when she's... Okay.
Working tax credit, I'm afraid, is outside my area of expertise, Catherine. I think you're going to have to speak to your accountant about what you put on your tax return for that.
Sorry about that. If there's anything sort of if there's anything a bit more specific that you're looking at as well, then do put it up into the Q&As and ask about what you need to do. But unfortunately, working tax credit. Sorry.
I can't answer you. Sorry.
My last question actually was going to be about how to make the self-assessment process easier, because it's the second half of the question. I've not claimed any drawings from business while building up or dividends. Also have housing benefit and done temping work to do these need to go on my self-assessment?
Again, I'm sorry, Catherine, you're going to need to speak to your accountant. That's getting specific. I'm not actually authorised by HMRC to give you specific accounting advice on that point. You're going to have to speak to your accountant about that.
Really sorry. Okay, sorry, back to my question.
Yes.
To make the self-assessment process easier and so that you're not left in the start of January, frantically rushing to get to the deadline, or taking a box full of receipts through to your accountant going, fix this for me, please, so I don't get fined. Well, what's the sort of thing that you could be doing kind of now to get yourself sorted out for that?
Make sure your figures are up to date is what I would say. At FreeAgent, we say that if you spend an hour every week looking after your books, that is enough to keep them in good order. And then there's actually very little to do in terms of pulling that all onto your tax return, especially given FreeAgent does it all for you. So don't try and do your books in a rush all at once after the end of the year. Do them bit by bit, do a little bit every week, do your invoicing, make sure your bank transactions are all in the system and that what's in FreeAgent agrees to what's in the bank. Make sure that you've recorded everything that you've spent from your own pocket under the expenses area. Make sure basically that your figures are up to date and complete as early as you can. Do it on an ongoing basis, as I say. Use things like the recurring invoice profiles, automatic bank feeds, the expenses through your mobile. Make sure that you're tracking things as they happen, because then A, you won't forget what they are, and B, you won't risk missing them out. So my suggestion would be don't just leave your books to do after the end of the year. Do them on an ongoing basis, because you really will find that's much less hassle. Plus the fact that you've got a fighting chance of getting more tax relief. Kevin, our business development director, tells a story of his next door neighbour who did his books only after year end, only discovered then that he actually had enough cash and profit to spare to buy himself a new tractor for his farm. If he'd known that before the year end, he could have got the tax relief a year earlier. So make sure that you do your books in good time would be my suggestion.
And I think if you're coming towards self-assessment as well right now, it's don't leave it. Get in.
Exactly. Get it
start
done.
It now.
Get it done.
Ideally, it would be great if you've already been doing this stuff for the last few months and stuff. But get to the point where you start getting a hold of it now, because if you do wait, and we've seen it, we've seen it for the past few years and stuff. We always get people that come through to us on Twitter or emails, and the support team get the questions, which is people that have left it till the last minute, who really are desperate and you don't know what to do or where to start. So I think it's make sure you're doing that quick. And also it gives you more sort of breathing time as well at the end as well, so that you can double check things, make sure that you've not made any errors, if necessary get your accountant involved so that they can double check everything, and it makes it just so much easier and probably ultimately cheaper for you as well.
It does, yes it does, because if your accountant has got to go through all those receipts, you're going to pay a lot of money for their time, whereas if you've got everything in apple pie order and correct, then that will be much easier for your accountant and much quicker, so they'll charge you less. The other point I was going to make was make sure you've collected all the necessary information to do your tax return. Remember, you might have to include things like interest you've received on a bank account. We've got white papers that help guide you through that, but make sure you've got all your information collected safely in one place. And as Adrian says, don't leave it too long to do your tax return. Don't think, oh, I'll do that after Christmas, because January really does go fast like that. If you leave it till after Christmas to take your paperwork to your accountant, you are also likely to pay a premium, because your accountant's going to have so many other tax returns to do that month. Don't pay extra when you don't have to. Do your books as you go along. Think about doing your tax return now. Get it in as soon as you can, and then you don't have to worry about it anymore.
Exactly. It's never too early.
No. Well, it is. You can't do it before the end of the tax year. But
after the tax year.
Yes, exactly. Quite right.
Cool. I think that's probably going to be us for today. I think we'll leave it there. Thanks very much for stopping by and watching. Really hope this has been useful. We're going to be running another one of these hangouts later on in the month, in a few weeks' time, sort of 3-4 weeks' time, I think. But we'll put details of that up before we do, and let you guys know well in advance. So if there's any questions that you can think of since they're in the meantime that you want to come and ask us specifically about self-assessment or something that's involved in your self-assessment return, then please do come back. As we said earlier, we'll put all of the literature that we've got up on the Google Plus page as well. including the white papers and the guides and stuff. We've got a lot of literature that we had from last year, which was really useful and helped a lot of people. So we'll give you all of that. We'll also be starting, I think, in the next few weeks, some of our self-assessment work for this year as well. So we'll be dropping those into all across our social media channels and over on our blog as well. So if you keep your eye out on freeagent.com for our blog. Obviously, you know where our Google Plus page is because you're here. You can get us on Facebook, which is FreeAgent app, all one word, and to Twitter, which is just @FreeAgent. So that's how you can keep in touch and find out what's happening. And very finally, as well, we've obviously been talking about using FreeAgent as a way to file your tax return and self-assessment. If you're already using us, brilliant. That's absolutely fantastic. Go have a look through on the website, find all the info that you need about these kind of things. If you haven't done self-assessment before and you want to know how you're able to file with us, then please do. We'll post links to that. And if you don't currently use FreeAgent, then please do. Please go and have a look over at the website. As I said, freeagent.com. You can take a 30-day free trial, completely no obligation, anything else. Just click on there, have a look, and see if it suits you. Because yeah, we're always looking to try and make certainly self-assessment and just tax and accounting in general much easier for people. So please go and have a look, and it'll be great if you like what you see and you'd like to join FreeAgent family.
Absolutely right.
Excellent. So as I said, thanks very much, and we will see you next time.
Great. Thank you very much.
Bye.
Bye.